Hi, welcome back to Hannah's Tony Talk. Canada just dropped 2025 federal budget, and guess what? The government is projecting a $78 billion deficit. That actually is bigger than the one during COVID, when the economy was basically shut down. So what's going on? Where's all money going? And most important, is this good or bad for news for Canadians like you and me? The 2025 budget was tabled in November 4th by the Finance Minister, and it's not introducing massive new taxes or spending programs. Instead, it's mainly about tying up to loose ends and previous budgets and fine-tuning Canadian tax system. But that massive $78 billion deficit is raising eyebrow. It shows that even if though the government is trying to control costs, spending is still outpacing revenues, largely due to a higher aging population pressures and ongoing social support programs. Let's start with what actually affects you personally. First, personal support workers tax credit. If you work as a personal support worker in healthcare, hospitals, nursing, homes, or similar facilities, you could get in your refundable tax credit worth up to $1,100 per year from 2026 to 2030. However, if you live in BC, Newfoundland, and Labrador, or Northwest Territories, this not apply because your provinces already have waged up through federal funding deals. Second, top-up tax credit. Remember that middle tax cuts, the lowest federal tax rate, went down from 15% to 14%. That sounds great, right? But it would have reduced the value of your tax credits. So now there's a top-up credit to make up, you still get the same credits as before. And third thing, the automatic benefit filing. Big changes for low-income Canadians. Starting 2026, the CRA will be allowed to file your taxes for you if your income is below the basic threshold. They'll send you a pre-filled return. You can confirm it or edit it. They give you 90 days to respond. If not, they will file it anyway, so you can get still your benefit. That's huge for people who miss on credits just because they don't file. For those involved in estate planning, family trust, there's a big update on the 21-year rule. Normally, trusts are deemed to sell their assets every 21 years, but a lot of people, they go against this, or they try to prolong it by moving money around through corporations or through second trust and the way around it. But after 2025, the budget, these loopholes will be closed and you will not be able to do this. Transfer that try to reset the 21 years clock will be caught. This change kicks in the transfer after November 4, 2025. Corporate structures. Some private companies have been deferring taxes using holding companies with different year ends. The government closing that loophole if the timing doesn't line up, and dividend refunds get suspended until the next year of the tax is paid. This applies from November 4, 2025. Manufacturing incentives to boost investments. Any new manufacturing or processing buildings can be fully expensed 100% in the first year if it's used before 2030. That means it drives job creation and attractive investments to Canadian industry. We have also the qualified investment simplification. Registered account like RRSPs, tax-free saving account, and the FHSA are getting simplified rules about what they can invest in. The change makes it easier for small business investments to qualify starting January 2027. Some basic moves here. The underused housing tax and gone, eliminated. That was starting 2025. There's no more underused housing tax. on foreign-owned vacant homes. It was only around for a few years, and compliance was a mess, so the government scrapped it. Luxury tax, luxury tax also gone, at least for boats and aircraft. The luxury tax will still be applied for cars with over $100,000, but private jets and yachts, no. No more luxury tax. Okay. Here's what you want to find that you won't find in this budget. There's no new wealth tax, no changes to capital gain inclusion rates, no corporate or personal tax credit, no reduction of RIFs, minimum withdrawal. So basically stability for investors and retirees. So is it good or bad? $78 billion deficit. The biggest ones even bigger than the one during the pandemic. One, it depends. The government argues that this investing in Canadians and maintaining services and cleaning up the tax system. Critics says it's a warning sign that even though low unemployment and steady growth, we are spending like still we are in crisis. Either way, this budget feels less like a radical overall and more like a maintaining checkup, tightening rules, helping low-income Canadian, and removing a few burdensome taxes. What do you think? Is the $78 billion a good thing or bad thing? Drop something in the comment and please subscribe and share.